Everyone has misread strategy. And that wave, that we see of confusion is driving one of the biggest signals forming around Bitcoin right now. The reaction online, if you saw it, exploded fast. The narratives came out even faster, and almost nobody slowed down long enough to look at what the move actually meant. And when you see the real picture, which requires you to zoom out, the entire moment we are in starts to feel very different. So make sure you stay with me until the very end, because once we walk through what strategy was really doing and setting into motion, I'm going to show you the real signal inside Bitcoin's behavior that almost nobody has noticed yet. It's subtle, it's rare, and it tells a story about this cycle that most people are completely missing. And it validates something I've been saying here for some time now. I will be sharing it with you closer to the end of the video, but I'm very excited about this. And as we move through everything today, I'll highlight several major moves from institutions that reveal something people often overlook too. Bitcoin's adoption curve is strengthening even while the market feels uncertain. So I hope you're excited. I am very excited to bring you today's video. And without further ado, let's get into it. And we're going to start with what strategy actually did. Because strategy came into the week holding around 650,000 Bitcoin, worth more than 55 billion at today's prices. They also carry about 8.2 billion in debt. And as we mentioned yesterday, I'd encourage you to go watch my video, they created a $1.4 billion cash reserve. And those numbers sent a message that swept through the crypto space like a tsunami. Traders were treating that news of the reserve like a warning light and assumed the worst. They assumed it meant strategy was preparing to unload Bitcoin. You probably saw the takes flying around. Strategy's market cap sat near $45 billion, while their net Bitcoin value sat over $48 billion, which pushed its stock into a rare discount in comparison to the Bitcoin it represents. And that discount stood out because strategy has spent years behaving like a Bitcoin operating company with an active approach. So the market usually prices in a premium. And the rumor that kicked this off came from a misunderstanding. People saw the reserve and assumed pressure. People love to fill in the blanks. They saw the discount and assumed weakness. However, the missing piece was what the reserve actually covers. That said, let's get into what the reserve actually covers and why the market misread strategy. The reserve was created to cover roughly 21 months of dividend and operating costs so the company can move through volatility with breathing room. It's like having savings for a rainy day. However, dividend talk started bouncing around, and people imagined a large liquidation scenario ahead. Why? Because the market is in a volatile, unknown phase right now. So people tend to look at the world through their own lens and their own fears. I'm sure you've seen it even in your personal life with your mom or your brothers, your siblings, your friends. If they're not doing good, they see everything through that lens. Anyway, the scale never matched their fear. Annual dividend costs sit near $800 million. And the reserve already covers almost 2 years of those obligations. This move also gives strategy more flexibility with lenders and rating agencies, which explains the shift in policy language. Think of it like building a cushion. Companies do this when they want room to maneuver, smart companies anyway. They do it when they want to move through turbulences without touching their strategic assets, as once again, we should too be managing our assets and our savings. So when we go through times as we are now in the market, we're fine, and we do not have to liquidate our Bitcoin or our precious blue chip assets. And this is exactly what happened here. But all right, let's switch gears now, because this is where the real split begins. And the two interpretations that have shaped the narratives moving around right now in this space. The first interpretation spread across retail. And by retail, I mean the 99% of everyone in the market. Now, to them, large reserves create a feeling of storm preparation, right? And many people, okay, in this 99% of everybody, retail, looked at the silence that we're experiencing in the market and assumed strategy was expecting pain ahead. Once again, looking through their own lens. Now, the second interpretation came from institutions, okay, the whales. And what they saw is a company with very little liquidity suddenly building a 21-month war chest, a cushion, something that would increase their capital strength and lower perceived credit risk, which therefore expands their access to financing and supports future ratings. Analysts who follow the company closely explained this view clearly. Strategy showed it can raise more than $1 billion in a weak environment. If that's not strength, I don't know what is. All during a holiday week, which is typically challenging, and without putting stress on its own stock. Brilliant. So a move like this, what strategy just did, signals confidence behind the scenes. And Saylor later mentioned that selling could be considered under specific conditions, like when stock trades far below the value of its Bitcoin, and only if that move benefits its shareholders. That line alone spread like wildfire, and many people read it as a liquidation signal, once again, because of the fear in the market. The context highlights decision-making flexibility, which is something rating agencies and lenders usually look for. So strategy completed two moves at the same time. They strengthened liquidity and expanded optionality. This gave them room to move through volatility without touching their Bitcoin stack. Genius. But now let's talk about why the market feels heavy around all of this. What's affecting the market's lens and how they're viewing everything so pessimistically? A lot of that has to do with the macro pressure behind the market, okay, affecting the market's mood in the moment, right now. Somebody in my comments said, oh, the chart actually does tell you everything you need to know. Well, I think you took it out of context. If you're watching this video, then this answer's for you. And maybe this helps everybody else. What I meant in that statement is that it doesn't show you the future, right? It doesn't show you the next year. It doesn't show you even the next 3 months. It shows you what's happening right now, right? So if you're a trader, then you don't have enough information in the chart right now to make a decision one way or the other, which is why I would discourage that, especially putting any sort of like leveraged longs or shorts, because we just don't know enough in order to make that kind of a decision. But what I'm talking about when I make that kind of a statement, and I'm speaking as a fundamentalist, and I'm speaking in terms of the next 3, 4, 6 months to a year. Okay, I'm long-term minded, long-term sighted. And if Bitcoin is going up to $1 million here in the very near future, then it doesn't matter right now what the price is. Anyway, as I was saying, we know that Bitcoin's chart right now is reacting to something larger in the system. The Fed just injected $13.5 billion into the banking system through overnight repos, which is the second largest spike since COVID. And moves like this usually show up when banks struggle to borrow from each other, when liquidity tightens and funding costs climb. And the SOFR, SOFR, which is the overnight financing rate banks use, moved above the Fed's target band for 3 straight days, which signals strain inside of the system, inside of the plumbing. And we actually hear from Raoul Paul pointing out the tension and mentioning the Fed may need a temporary fix to stabilize things. Kind of interesting, huh? Lately, I've been doing a deep dive, just as a quick parentheses, just to let you know where my mind and research has been at lately. But I've been doing a deep dive into Jekyll Island and the way the central bank was even created. Super interesting. Once I finish, I will make a show and synthesize everything that I learned for you so you can get a deeper understanding of how our system works, right? Which are the masters behind the puppet strings that we see ultimately affect monetary policy, interest rates, that whole world. Super interesting. Anyway, back to what we're talking about here today. We also see the Japan angle here. When the Fed cuts rates and the Bank of Japan raises theirs, the carry trade begins to unwind. I went into this in further detail in my yesterday's show if you want to go check it out as well, so you have some context upon which we're building today. And that setup, okay, appeared in July of 2024, last year, at which point Bitcoin dropped sharply and found a bottom a week later. And right now, a similar window could open up again around December 10th. I'm not saying it's going to happen exactly this way, but we know history likes to rhyme, though we do know we've broken away from the 4-year cycle. Separate topic, but I'm going to address this here in a moment. So hold that thought. And before we go deeper, a quick reminder for anyone new here, and welcome if you're new. I'm so happy you're here. I've seen so many of your comments in the comment section, and I absolutely love hearing from you guys. Anyway, for everyone who is new here and doesn't know or just needs a refresher, QT stands for quantitative tightening. It's the phase where the Fed pulls money out of the system by letting its balance sheet shrink. Liquidity becomes tighter, funding gets harder, and risk assets feel it early. And when QT ends, quantitative tightening, that pressure stops building. Now, here's the part that caught a lot of attention this week. Benjamin Cohen highlighted a timing pattern that showed up and has shown up in past cycles. Bitcoin topped 36 days before quantitative tightening ended in 2019 and 56 days before QT or quantitative tightening ended in 2025, this year. This pattern shows Bitcoin reacting early whenever the system shifts towards less tightening. And there is another view that adds even more context to what's going on. We hear from Tom Lee calling the end of QT, quantitative tightening, one of the strongest tailwinds into year end, and pointed to a 17% market rally the last time this phase wrapped up. Moves like this tend to appear once the tightening pressure fades and the market finds a better rhythm. Both observations sit inside the same theory. Bitcoin reacts early, the system adjusts afterwards, and the market often finds more stability once QT is behind us, thank goodness. So with the macro pressure clear, let's now move into what Bitcoin is signaling internally. Miners we see are operating with Bitcoin only 19% above their electric cost, a level that has appeared 2 times in the last 5 years. March of 2020 and April of 2024. And whenever Bitcoin drifts this close to its production floor, miners' pressure begins to build, and that usually marks the later stages of a correction. And as that pressure builds, another piece of the puzzle comes into focus. If Bitcoin reaches $96,900, around $10.2 billion in short leverage, okay, people betting against Bitcoin going higher, gets liquidated, a level that often turns into a target once momentum shifts. So it becomes a line the market quietly gravitates towards. And right as this level is forming, a bigger valuation clue shows up. The Bitcoin versus gold ratio dropped below a 15-year power law floor, something that has only appeared once before, in late 2017. Moves like this usually snap back because they stretch the long-term relationship between both assets. From there, okay, from here, the on-chain picture fills in the emotion behind the move. Traders in the 1 to 3 month range have been realizing losses between 20 and 25% for nearly 2 weeks, which signals capitulation. Selling at those levels usually reflects exhaustion, and that same exhaustion shows up in the momentum. Velocity RSI on the 3-day chart moved to levels last seen near the previous 3 bear market lows. And the final piece sits inside the exchanges. The Binance Bitcoin to stablecoin reserve ratio just hit levels that appeared during the 2018 and the 2022 bottoms, which means stablecoin liquidity is sitting on the sidelines during one of the most emotional parts of the cycle. And all of this lands in the same place. Macro pressure builds outside the network and exhaustion forms inside them. But now let's look at who is stepping in during this time, who is not afraid, okay? And who we should be modeling after and taking our cues from if we can and have extra dry powder on the side. So let's take a look. Let's talk about the institutional wave moving quietly through the market when everyone else is scared and asleep. Vanguard, for instance, will open Bitcoin ETF trading starting tomorrow, which means retirement accounts, conservative investors, and long-term wealth planners gain direct access to Bitcoin ETFs for the first time. Moves like this usually open the door for steady capital, and we are already seeing hints of this shift. Bank of America now recommends a 4% allocation to Bitcoin and crypto for its clients. Amazing. And as this guidance is rolling out, Bitcoin ETFs have logged 4 straight days of positive inflows. Now, my personal hope is that eventually these investors giving their money to buy ETFs will someday wake up and realize they should be owning and custodying their own Bitcoin. But for now, we're grateful as someone left a comment on my X account over the weekend. And I agree. And I've been saying this actually from the very beginning, back when I first started my channel, right after the ETFs first got legalized, BlackRock's ETF first got approved. I've been saying that this was ultimately going to be the biggest marketing campaign for Bitcoin. It would start off through the ETFs, which is not ideal. Everyone here who knows, but it's a good marketing campaign. It's a segue, right? It opens the door for people to start learning about Bitcoin and eventually find their way towards realizing they should just own their own Bitcoin. But anyway, for now, it's still initially good news. It means Bitcoin's mass adoption marketing campaign is thriving and is continuing to bring new people in. Anyway, as I was saying, this is good news because it's all happened even as Bitcoin's price has pulled back. And this kind of flow usually appears when larger investors are accumulating quietly. And the pattern continues onto the Ethereum side of things as well. Bitmine Immersion added nearly 100,000 ETH and now holds more than 3.7 million ETH, which shows how deeper pockets are positioning during uncertainty, as we too should be doing. It's not time to be afraid. It's time to lean into this enormous sale that is going on, but only for Bitcoin, Ethereum, Solana, Sui, and top blue chip tokens, though this is not financial advice, and you should absolutely do your own research. But okay, we also see that regulation is moving in the same direction. Japan just moved towards a 20% crypto tax, which simplifies participation for an entire market. And at the same time, the SEC chair said they are working with Congress on crypto market structure legislation and explained that progress is on track. Signals like this usually point towards more clarity and easier access over time. And research firms are leaning into the same idea. Grayscale expects new Bitcoin highs in 2026 and explained, as I've been saying, drumroll please, why they also believe the classic 4-year cycle may not apply to the current structure. You're welcome. I've been saying that here for a long time. And Tom Lee echoed this view and expects a new all-time high by January. So these moves, okay, all are stacking up and stacking up in the same direction. While the market feels uncertain, we know now this is always our cue to lean in. Be greedy when everyone else is fearful, and be fearful when the 99% of everyone is greedy. Large players, large whales continue positioning themselves with confidence, as should we. So now let us bring all of this home and wrap it up. Today we covered how strategy set off a wave of confusion because their move had layers, okay? It was a bit too much for the market to metabolize given the current conditions. Plus, layered decisions always spark noise, okay? And when you break down the numbers, you see something very different from the reaction. They extended their runway is all they did. They strengthened their balance sheet, and they lowered the chance of touching their Bitcoin stack during turbulence. Very smart. And actually, it's a lesson for us all to model off after if you're not already doing this. We also covered today that macro pressure showed up at the same time, okay, which tends to happen. And we saw that Bitcoin reacted the way it usually reacts when the plumbing tightens. Inside the network, exhaustion signals flash together, while outside the network, institutions keep positioning fearlessly throughout these uncertain times. and they understand the market is on sale. They understand Bitcoin, Ethereum, all the top blue chip tokens, though, although I'm not talking about those right now, they are on sale. And yes, we are going to do a video focused only on the blue chips I believe in and which tokens I believe will pump the best, the highest, and the most steadily, because those are not often the same tokens, right? But I will go into all of this in an upcoming video. I will let you know. But yes, I did hear your request on this topic. It came in from many of you, and we are going to go into it. But anyway, as we wrap up today's video, I know this time, these moments feel extremely uncomfortable in the market, especially when you have your friends and family and people who don't understand Bitcoin, okay, speaking negatively about it, trying to breed fear into you. All I can say to that is just it's important to realize who we're talking to, right? This is actually, I believe, a principle in psychology or in therapy, which is when a therapist talks to their patient, one of the first things they do, and let me know if you're into psychology, you would probably know better, but you have to evaluate who you're hearing from. Are they in an emotional state of being? Are they down? Are they depressed? Are they fearful? Based on that general understanding of who's talking to you, you then listen to what they have to say, and that allows you to put it into context. If this is a fearful individual or someone who's down and out in life right now, then of course what they're going to tell you is going to be along those same lines, right? And of course, you should not absorb it. You need to have your barrier of protection, of sound mind, which is based in your research, which is based on, yeah, what you know. Okay. And you need to protect yourself from negativity this way. Anyway, I hope you gained value from today's video. And if you did, then just like the video, share it with a friend or family member, or maybe this person that, keeps sharing fear with you and doubt. Maybe share this video with them. And just let them know that I bring well-founded research and I am unbiased. And when I am biased, I explain why. And that my goal here is to simply educate and share what I'm always learning and what my amazing research team is always researching with you, so you can be well prepared and you know what's going on day to day, because I bring you this news and information Monday through Friday. And I love you guys so much, and I wish everyone so much success this bull run, because it is not over, even as Grayscale is now saying, and Tom Lee is even echoing, okay? So I will catch you guys here in my video tomorrow. Take care, and I'll catch you guys then.